Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay. Don't fight the Fed. As we're watching this inflation data come in this morning, we saw hotter than expected high inflation numbers from the CPI perspective this morning, and the market really was rocked around that number. Into the number, we were up 1%, then we went down in the day. Now we're back up almost 1% in the S&P 500. The VIX made that same round trip. Now we're down at 30.5, and we're really seeing these big moves, which is not uncharacteristic of a bear market, which we have to admit that's where we are now. The market continues to be guilty until proven innocent. And again, don't fight the Fed. The Fed has said they're going to be tightening. They have said they're going to be reducing the money supply, and it puts a dampening on growth, and it's harder for equities to grow in that situation. We knew the reverse was true when the Fed had low interest rate policies. When the Fed had QE, it was a lot easier for equities to gain value in those time periods. But now we have to accept the fact that the Fed's taking money off the table and interest rates are going up. It's going to be a harder time for equities to make money. Now, having said that, we're having this VIX in this 30 to 35 range. A lot of people are looking and hoping to see a final capitulation with a VIX spike so we can finally bottom in the market. Now, there's two ways we can bottom. It would be that way, which is the V way, where we have a heavy selling on heavy volume. At the same time, there's a VIX spike and then a reversal. That's a capitulation V bottom. And if there's the other way we can bottom, would be a U bottom, which takes a lot longer. It's where the selling gets exhausted over time. MACD convergence happens when there's less selling. Selling happens on lower volume. And then finally, time passes and the prices can catch up to earnings, which I think that's closer to what the situation's calling for. It looks more like 2000 or 2002, where we had a high PE ratio. Those need to come down. And remember, don't fight the Fed. The Fed's going to stay hawkish until we can get inflation under control. The Fed has two options. It's either a recession or stagflation. I think given those two bad choices, they're going to choose a recession, which for a market equity perspective means we have to take some medicine and wait for this to cool off. For Equity Armor Investments, I'm Joe Tigay.